Hey there. I'm recording this one for the second time because I was recording another screen while actually going over all of this, so I had to get all these stuff back and it's fine. So what I wanted to talk about is the fifth chapter of the book is about major reversal patterns. So these are sort of the patterns which are important to know, or like the main parts of the book, and yeah, I'll just go over them. So, first of all, this is sort of a summary he mentioned at the beginning of his book, which is I'll just go over them. So, a prerequisite for any reversal pattern is existence for prior trend. Those are pretty logical because if the price goes another way, it's a reverse, of course. And then he mentions the first signal of an impending trend refers to often breaking of an important trend line. Impending is, I think, we'll say something threatening is about to happen, or uh, something scary is about to happen. So I guess that's really it's not good for the bulls or either if it's or the bears if it's gonna go bearish or bullish. So I guess you can look at it that way. So the larger the pattern, the greater the subsequent move. So what I mean with this is, let's say there's actually a pattern being formed which takes 10 years to build. That pattern is much and much more significant than a pattern that took 1 year to build or like a day to build. Literally, it's so much stronger. There's so much more price range. There's so much more volume going into that. There's just a lot more. That's why it makes it a lot stronger. So if you're really looking at the short wave or like a swing traders for 2 to 3 weeks, also look at the long term because there could be a really important trend line or a support or resistance line in the way which really messes up your pattern. So topping patterns are usually short in duration and more volatile on bottoms. So basically, when something goes bullish, there needs to be a lot of volume, otherwise the price won't go up. And with that volume, if it's not really kept up, it just starts to decline. It sort of will break its own legs and fall back down again. And most of the time, 100% back to its original price, or 50% or 30%, something like that, in the ranges of that one. So bottoms usually have smaller price ranges that take longer to build. Yeah, so this one is basically bottoms have a really it takes long to build. Yeah, because sometimes you're just in multiple weeks of around the same price pattern, but the price is generally decreasing like 10 euros a day, for example, the Bitcoin chart, and it takes so slow. And then there's like one bullish rally, and then it's all over again. So I guess that I understand that one. And on the last one is being volume is usually more important on the upside. I forgot the fifth one. Sorry. Bottoms usually have smaller price range and take longer to. Wait, what? What did I skip? Bottoms are long, tops are short. Okay. Volume is usually more important on the upside. I already told about this, but it really needs volume. It needs to keep the volume to get up to higher prices. Otherwise, it won't be able to do that, right? So let's go over the head and shoulders pattern, which is the first pattern and actually one of the most important patterns, according to major reversal pattern guide sort of thing. And there's basically a few factors that come into play. First one is being volume. Second one is the shoulders, so that's price range. Uh, well, that's actually it. I guess time, you could take time, but that one's pretty it. So if you go over the volume, you will see that on the first shoulder there's the highest amount of volume. On the second peak, you see there's actually not a significant but a smaller amount of volume going on. And on the right shoulder is actually a significant amount of less volume, which is this one is kind of sloping down, and the neckline is kind of sloping up, which basically means it's gonna go down, or the probability of this trend reversing and going down is high. It's really high. The other one being, well, I don't really have to go over anything. I can go to look at Nike because the book mentioned this one in their own sort of way. So where are they? 2005, right? I think he mentioned 2005. Yeah. Jeez, take long. Where is it? I don't see it. Somewhere here. I'm sure of it. I don't immediately see it. sorry, it was 95. I was looking at the wrong stuff. Yeah, so, oh, yeah, okay, you see it. Where's it here? No, okay, it's here. So you can directly pretty much see it. A peak, big path. A peak with a sloping thing and going. This is actually not the correct one. What the hell? I can't find it. Well, I guess I'll just do it with this one. I can't find the exact example they use, but maybe it's better I do it this way. So first of all, I'm gonna draw the neckline based off of. Jesus, it's wrong. So I'll do something like that. I'm gonna draw the neckline based off of these 2 points. It should be sloping upwards. Blah. This is probably not a good example because this one is supposed to sort of slope upwards. So I guess you really wanted to see this peak going even higher than this one. This would be the ideal. This would be the ideal. Sorry. I guess I'll just do it with whatever is here. So basically what you can see maybe is there's volume and then there's even less volume on this peak, but it's not really a clear peak. And then we have even less volume on this one, which is what it's supposed to be. This is not a good example. This is not a good example. But that's basically what it's supposed to mean. And then a really cool trick which you can apply is the price it takes to go from, let's say, ABC to D or D to E. It's gonna have the complete reversal on the opposite as well. So the price will actually go down all the way to 6. And it doesn't state on which pattern it is, but I think it believes to be the first or even the second wave after it has gone down. And how they define this is basically 100% retracement is going to go all the way down to 6. And most of the time these retracements are between 33% and 66%. And in this case it was at 80%. So yeah, I guess it's just a probability thingy. I'm not sure what to make of it, but I think it's a probability thingy. You can do whatever you want. So let's move to the new thing. Kept them in Bitcoin, right? Where is it? Why is it? Okay, there it is. Alright, so this one being the inverse, or basically meaning the reverse head and shoulders. Basically, same thing happens at head and shoulders, but the other way around. So you can see the volume generally increasing, neckline sloping down. Yeah, and just forming a really good neck and shoulder and reversing all the way to the upside. Then we have a false head and shoulders. Basically what this means is it looks like it's going to be head and shoulders pattern, but what happens is the shoulders actually, the price resumes to normal, and it isn't per se head and shoulders. What I find weird though is in example it actually shows that the price is going upwards. But I guess here you wanted to see this. I think if you're here, you can see head and shoulders forming. Only to see it stops here and actually makes a second shoulder here, which is kind of ugly. Or sorry, it's here it makes second shoulder. So I guess this one is, I don't know, but I guess you could take it as support and go from it that way. So yeah, that's cool, right? So let's go over these two. These actually belong together in my opinion. So what these are is basically they're double tops and triple bottom, triple tops. So here you can see on the left side you have it touched the top 3 times and then went down. And as you can see, there's 100% price reversal to the downside, and same happens on the double top. I'm not sure what the difference is between those, but I feel like they're the same, so that's why I put them together. And then we go over to, oh, sorry, actually important things to mention. Where is it? They're not coming back. Important things to mention is that peaks are not always at the same price in double tops and double bottoms, just around the same price. I think they want you to take a 1% change based on a daily basis. like the daily chart. And then it's not problematic if the second peak is not really fully reaching the first peak. That's fine. But it is problematic when the second peak actually goes beyond the first peak, because, well, then there's actually, it's a higher price, or if you look at it on the reverse way, it's a lower price, which is not a good thing, and could mean the trend's gonna just continue and do on what it's doing. And then we have some saucers. I think that was a pretty funny name, because I was used to believe this was a cup and handle, because you've sort of got a handle here. But this goes back to the fourth or the fifth point from the summary he mentioned in the beginning, which was this bottom take longer to build on lower volume. And as you can see it right here, the bullish trend is quite fast. It went to, what is it, 93, that's 92.6. And it took like 3 years to build, and within 2 years it was up. You know, it just takes longer than tops. And then you've got a V-neck, and basically this one being, there's a lot of volume on a complete reversal like a V-neck. It just completely reversed to the other side. Completely. And this one actually happened with quite a lot of stocks I've actually looked into. But I think a good example is Facebook. You can see so many V's. Here is a V, but this isn't per se a V, because the volume indicator didn't really show too much price action, even though it showed. So you can't really see here, but this one is giant, right? You can just see this is a giant V. Fuck, I can't. Oh, it doesn't let me. Come on, come on. Yes. No, come on. Stop trying. Okay. So, no. Okay, this is a giant V. Basically meaning a large amount of volume went into this V and completely reversing the pattern, even though the pattern was already in a downtrend. The pattern was already in a downtrend, but as you can see, the V's actually pushed it upward. And these V's happen often here. So you can see there's another V, some smaller V. This is just a price drop. I wouldn't really make a V out of it, because it really didn't have it did have a sort of an upside, but the downside was just significantly more. And this is pretty much it for the video. I'm sorry it was kind of aggressive talking or going fast, because yeah, I already made the video, so I wasn't that motivated to do this one, but I thought, oh, let's just make it fast and I'm done with it, you know? So yeah, thank you.